Radar section, and like promised, we are now going to be speaking to the top management of Shriram Properties. Murali Malayappan, the chairman and the managing director of the company, now joins in with us to discuss more about the Q2 earnings and the outlook on the business is concerned. Very good morning to you, Mr. Malayappan, and great to have you with us on Business Today Television. I'm Sakshi, and with me is Shail Bhatnagar. And before we start off by discussing what your key earnings have been in Q2 and what is the guidance that you'd like to give forward, we've just crossed the festive season, the peak season for sales in the real estate space. How have you really seen the kind of sales momentum that you've clocked in, and how was it vis-a-vis the previous year? And probably if you could also tell us vis-a-vis the previous pre-COVID levels as well, how has the momentum grown?
As you know, the market has been extremely buoyant and doing phenomenally well. There is a big demand which is piling up now. Typically for real estate, H2 is as you rightly said, post-festival period. H2 will be a much bigger number. As an organization, we have done about 1.9 million square foot sales in H1, and year target is about 4.8. We'll be comfortably reaching this target. In terms of delivery, we have delivered close to about 830 units, roughly about 1.8 million square foot in H1, and H2 we are on track to deliver another 2.56 million square feet and about another 2,500 units we expect to deliver in H2. Everything is on track. So business momentum is good, growth momentum is very good. We are pretty confident next 3 years time things will be very positive. Particularly there is a general perception that during election period whether there will be slow growth in momentum, which I don't believe in that. I strongly believe that there is going to be a bigger growth in H2. And not only that, post-elections, it is going to be next 5 years. It's going to be a much bigger growth is what we are gearing up altogether.
Mr. Malayappan, you just talked about how you're going to be delivering 2.5 million square feet of residential space by FY24. What are the kind of sales that you're eyeing with this kind of a sale, and in which quarter would you see the peak potential come in as far as your revenues are concerned?
Generally, Q4 is the most promising one compared to Q3. But Q3, Q4 will be both the quarters will be really good for us because post Diwali, everything will start now, and Q3, Q4 will see a bigger growth. We also expect to have a sales revenue of close to about 2,300 crores this FY24. We are on target to achieve. All the projects are fully lined up. For example, delivery, most of the projects are nearing completion now. Whatever the projects are targeted for delivery in FY24. Hopefully by December, half of the project will get completed. January, half of the project will get completed. So March, looking very bright for us in terms of delivery timelines and numbers.
Right. A very warm welcome to you, Mr. Malayappan. Shriram Properties has mostly been a south-based player, concentrating on cities such as Coimbatore, Visakhapatnam, Bengaluru and Chennai. Given the fact that there is universal demand for middle-income housing across the board in India, are there any new geographies that you plan to add over the next 2 or 3 quarters?
We have presence other than the cities what you have outlined. Kolkata also we have large presence. We have very large township coming up in Kolkata. Is doing phenomenally well. That is particularly mid-market and affordable housing segment. We are looking at expanding into Pune. We see a lot of similarities between Bengaluru and Pune in terms of customer behavior and demand. And also Shriram Properties has got a huge client base in the group overall. So there is a bigger advantage for us to expand into Pune. Hopefully before this year end, we'll be launching a project in Pune. So we are already geared up. And as you rightly observed, mid-market segment, according to me, that's my pet subject. Next to 20 years, the demand will not come down. Luxury, there has been a good demand, particularly post-COVID. There has been a very good demand. All the luxury projects are doing phenomenally well. But luxury, has the capability to go ups and downs. Whereas mid-market segment, which is likely to continue in this country for the next 20 years, and there won't be any issue on the demand. And the new geography like Pune will be expanding. Bombay, we are steady, but we are not made up our mind yet. But Bombay also we could potentially look at again mid-market segment, and Shriram has got its own base and client base, so we'll be tapping into it and take advantage of the situation.
Right. We've seen a fairly sharp increase in the net margin, somewhere to the extent of 500 basis points to 13.4% year on year. What would be the reason behind this, and is this something which is sustainable, Mr. Malayappan?
Yeah, it is very much sustainable because of the consolidation which the industry has gone through. There are few things which are happening. One side, there has been a strong demand, strong momentum of growth. Country is doing phenomenally well. On the other hand, market has gone through serious consolidation, particularly post RERA now. So only select players in each market. For example, every market if you take, just top 10 players catering over 80% of the market demand. So there has been a huge momentum for the growth, and I expect the prices to go up further. So we have seen about close to about 14% price increase in the H1, and we expect this to continue. No, may not be 14% in H2, could be at least 5-6%. But post-election, I expect the prices to jump phenomenally high.
Okay, so you're saying 14% is what we've already seen in H1, and you expect another 14% in H2.
Another 5-7%.
Another 5 to 7%.
During H2.
And in, after general elections, what is your expectation then?
Market is going to be in a very different scale altogether. Maybe, as Prime Minister envisions, he becomes a Vishwaguru for the world, and Indian businessmen can do lot better and do phenomenally well is our hope, and we are gearing up for that.
So how, what would you peg this increase in prices to? Is it like the huge demand that you're looking at right now? And with the increase in interest rates, has nothing really been on the flip side, on a headwind side as well?
See, if you look at the Indians per se, historically, we use our equity money or capital, our own capital for any home. If you look at the debt to equity ratio on any home buying, India is at the highest in terms of equity utilization compared to any of the Western countries. Western countries, you can say equity is about 1% and 99% is debt, or that formula. Here it's the reverse. I would say more than about 60-65% is equity contribution by the home buyers. 30-35% is the debt. So we are not dependent only on debt as a nation because it's a culture of our people. So now in the last, particularly post-COVID, you asked a very important question. Post-COVID, the savings mentality we have come back to again. Our Indians have come back to the saving mentality, and also the earnings have gone up in the last 3-4 years. So the disposable income for the people have gone up significantly in the last 3-4 years. Combined with saving mentality has come back once again, and real estate is the one most preferred option for any woman in this country. And our country is woman-led society. Though we can talk about men-led society, it is wrong. But it's woman-led society. Woman takes all the important decisions. Men only support the decision. So woman is comfortable with, unfortunately, not much with the stock market. That's the reason you see the allocation is far superior in terms of real estate and gold. So this will continue at least for the next 10 years is my view. I don't see any change. Hence, the price increase is, inevitable for the next 3-4 years.
Mr. Malayappan, I completely agree with you. Men only arrange for finances and execute the decisions that the women of their homes take. And I take it that you are in the same boat as me. So 100% agreed on this one, sir. And Sakshi is on this.
Yeah, she's smiling all over.
Also amongst the women who. Right, sir. Right. Perfect. So this is a very wonderful observation that women choose the house that men pay for, and that's the reason why you see phenomenal demand coming into the housing sector. Mr. Malayappan, I'd like to ask a fairly rhetorical question, which is that Shriram Properties started with an IPO of 118 rupees. This was about 18 to 2 years ago. And it's been a disappointment for long-term shareholders because, you are still below the IPO price despite fantastic performance. is the absence of a luxury project or luxury business in your overall offerings one of the reasons that the stock has not caught the fancy of shareholders who'd like to ride the real estate space?
We need to look at the contextual. See, when today market is slightly different on the IPO. In the last 6-9 months time, what we are seeing the capital market is very, very different compared to when we are looking at the listing. When we are looking at the listing, 21 December, we looked at just before our listing, Rakesh, you know, backed up the insurance company had a serious debacle. Then other e-commerce companies which had Swiggy, Zomato, all kind of Paytm, all crashed. So when we were about to do the listing, so one is the market sentiment was so bad on the capital market, and real estate after about close to about 10 years, ours was the first real estate IPO which has happened after about almost 10 years. So before that, there were a lot of people in the real estate space attempted, could not succeed. So we have created the success in hitting the capital market. But unfortunately, that day, market was not good. Hence, the stock opened at a much lower price. One. The second one is we had 58% pre-IPO, before listing by 4 large private equity players. What I understand, market perceives that as an overhang. During listing, they came down to 35%, but still market perceived it is an overhang. Hence, there could be an issue. Nothing to do with the business. If you have seen last, post-listing, quarter on quarter, the company has delivered. And we are in a market where there is a strong demand, and this will be a continuing demand. And Indian investors are one of the most smartest investors. They understand. So they may like to own a luxury home, people who are rich, but they may like to invest on the mid-market segment where there is a real long-term potential. So I'm sure the market, people in the market are extremely intelligent. So we are in the market where there is constant demand for the next 20 years. So hence, I don't see any reason for us to shift our gear to shift into luxury segment. I don't think that will be a game changer. But as you've seen that our stock, since whatever the listing day, has performed almost about 80% growth in the last about 1 year. So market started recognizing what we are doing now, and also the overhang more or less over. Now we have got only one TPG pending now. They hold about 10%. Rest all new investors. They made, I think, series of money. One investor who came in and bought out Wall Street Capital almost has seen 90% increase in the last about 12 months time. So it's a cycle. So we are in the right cycle now. We are in the right momentum. As an organization, we deliver in the, there's a clear path for the company to deliver in the next 3 years time, and projects are fully lined up. We are on the right track, and as you rightly observed, we are expanding to other markets like Pune and maybe Bombay. So with which we'll increase our growth further. So we are fully equipped to take the company forward to much greater scale. I am sure capital market will reward adequately is our appropriate is our need.
Fair enough, sir. Well, Mr. Malayappan, on that note, thank you so much for sharing all these valuable insights with all our viewers. All the very best to you, and we shall hope to catch up again to understand more about the real estate trends and the company's insights and the business growth strategies going forward too. With that, let's get back to the markets, the markets are